Welcome guys to the first video of the box system. This one we are going to discuss market phases. Market has just two modes of existence. One is when it moves sideways, something like this, or one where it goes up and down. So when it moves sideways, we call that a consolidation. And when it goes up or down, we call that a trend. Now, why is that important to know? It's important to know because we use boxes to define periods where price is simply doing nothing, moving sideways. And then once price leaves these boxes, we will have a trend where price will either go up or down. And we want to participate in that trend because that's where the money is made. All right. Now, in the last video, in the zone to zone trading system, we had learned to define zones. Zones are levels between which price moves, goes from one zone to the next. That will be the foundation of trying to understand the price structure in the bigger scheme. All right. In the bigger scheme, these consolidations where price goes nowhere usually happens between two zones. And once price leaves that consolidation, we will have a nice trend. All right. So based on our knowledge of zones from last videos, let's start defining some zones and show you an example of what I'm discussing here. I chose SPY monthly chart for it just to show you how the markets have done over the last 20 years, how that could have been defined by technical analysis. And also because we used SPY for drawing out the zones in the first videos. So on the monthly chart, I'm going to start drawing out some monthly zones and you will realize that price over 10 years simply consolidated between these zones. So this area, you can see it acted as resistance when price came to it a couple times, once in 2000 and then at the peak of financial crisis at 2007. Once price broke above it, it acted as support. I think price retested it once and then just took off. There you go. Now, there are many other zones in this range, all right? So I'm going to draw out some more so you guys see how zones are used to define boxes. So let's zoom in a bit. You can see this area acted as resistance, once price went above, came back to retest, acted as support and took off. Acted as support here too before price broke below. Acted as resistance all the way in 98 before price took off. So this area is a zone. Are there any other zones in this range? Yes, there are. You can see there's one here. What I'm trying to show you guys is that there are multiple zones in this range, but then overall price was stayed in between these two, the 78 area and 154 area. So there are multiple zones in this range, but on the larger picture, these two zones contain price for a period of about 10 years. Now, what does that mean? That means we can draw a box here. Boom. Now, once we have drawn a box, once we have defined a period where price was stuck between two zones and simply moved sideways in time, we have defined a period of consolidation. What happens from consolidation? When price leaves it, the market changes its phase to trending. Now the market is going to start moving up. All right. So hopefully that's clear on how zones are the building block or the foundation of defining boxes, and boxes help you define the periods of time when market is consolidating. Once market is done consolidating and it breaks out, now we have a trend. What is a trend? A trend is a sequence of higher highs and higher lows, or lower highs and lower lows. Now, if you don't understand what that means, it's okay. I will explain it further. But all I wanted to show you is we have this period of consolidation. Once price leaves the box, we start a period of trend where price will move in one direction over time. So that's it for the first video. I simply wanted to show how boxes are done. In the next video, we are going to discuss trend structure, how to read what's happening in this trend once price leaves the box.